And there we go. Hey everyone, I hope you're all doing well. Good evening to you all. Welcome back to another video. Today I'm going to be discussing how to document trades, in particular for 10K a month, in particular for passing prop firm challenges, prop firm accounts, and to be able to maximize profits when live as well. And what it's helped me do is reflect on my last months, weeks, and days worth of trading. And so I've been constantly able to improve and get better and not make the same mistakes. So what I'm going to do, because I don't want to waste your time, is I've got up an Excel spreadsheet that I made earlier, which is an example of how I document my trades myself. Okay, day in, day out, week in, week out, month in, month out. And so I'm going to share my screen now, and then I'm going to show you this example spreadsheet. So this right here is an example of how I document and journal the trades I take myself. So here we have on the left-hand side, we've got the trade number. We've then got the date. We've got the time. We've got the account it's taken on, the instrument, the time frame, the strategy, whether it's a buy or sell, the entry, the stop loss, the take profit, the photo itself, the risk taken, whether it was calculated, the lot size, the risk to reward, the profit and loss, and then the balance at the end. And the most important thing is the notes. Okay, the notes taken. So all of these numbers, all of these metrics are made up. Gold wasn't even at 1754 on the 25th. But you get the point. Just put in some random numbers and some random metrics just to fill it out a little bit more so you can get a rough idea. So essentially, the concept behind this is that each and every single one of the trades you take, you learn something from. Okay, and that you're not just gambling, you are strategically figuring out a strategy and figuring out whether it has an edge. Okay, and you're developing and you're learning and you're building upon that strategy. Okay, so you've got your trade numbers here. Okay, and of course, this list can go on and on and on. And another thing that I've noted is that what I do is I have different months. So for instance, we're going into Jan. Okay, 23. So I would have that there, and I would literally copy and paste, this template, and I would fill it out the same in January, February, March, and so on and so forth. But let's go back to December. This would be the example of how I document it. Okay, so the date would be here, the time of the entry, the account that it's taken on. So I tend to stick with the same account. Okay, I don't really have numerous different accounts. I have different spreadsheets for different accounts. So the same account is the same spreadsheet. Okay, the pair or the instrument, of course, this will vary. The time frame it's taken on. Okay, because then what you can do is you can back test and check which time frames you've been performing better on. The strategy that you've been taking. Okay, so I've got a few different strategies at the moment. I've got a breakout strategy, I've got an intraday trading strategy, and I've got some expert advisors. So I've got a few different approaches. And so, the breakout, some of the gold trades that I've taken and put in the trade channels, whether it's a buy or a sell, the entry, the stop loss, the take profit. Okay, a photo showing, the trade and the setup. Okay, so I can look back and see all of the different photos. Now, this is the most important thing for me, is like the accountability side of things. So risk, okay, how much am I risking? As of the moment, I'm actually risking 1% a trade, but just an example, 0.5%, whether it's 0.5%, 0.25, 1%. In previous videos, I've recommended sticking with the same percentage, because of course that can help in the long term. Whether it's calculated or not, this should always be a yes, because of course you always want to make sure you calculate your risk, comparing it to the stop loss, the lot size, okay, the risk to reward, and then the profit. Now, in this example, I've done, losing trades, okay, because what I've been able to do there is, learn something from it. These are all just made up numbers, of course, again. But, if we have 2 or 3 losing trades, we should be able to make a few things and a few notes. And typically, these are the sort of notes that we get, calculate the risk, with better accuracy, because of course this was 0.5% risk and we actually lost more than 0.5%. So, we should really reevaluate how we calculate the trade. Might have got unlucky. We might have, been a couple pips away from TP. Again, didn't maybe calculate the risk properly or close the entry, too early. That would be another thing that, I commonly saw at the start of my journey. Didn't have a stop loss set in the right place to allow breathing room. So for instance, we closed out early again. And then notes, we lost, but it was a perfectly executed trade. So there's a few different ways to go about, journaling your trades, but this for me has been one of the best ways to do it. The fact that I journal the entry through to the exit, the profit, the risk to rewards, and then, the risk as well, the risk management. It's really, really helped me hone in on the fact that every single one of the trades that I take, I'm accountable for. I'm not just YOLOing trades, I'm not just risking 4% on a trade. In particular for prop firms, this is brilliant because you can look back through. I know FTMO and my Forex funds, some of the leading ones, give really good metrics in terms of looking back at your trades and seeing how much money you made, your profit factors, your risk management you can look through. But it's really, really good for your own accountability to work it out and to do it yourself. But yes, essentially at the end of a prop firm, challenge, if you haven't passed, you can then look back at this and go, what went wrong? How can I evaluate it? How can I perfect it for the next time? And if you got a free retry, you didn't break any of the rules, but you had perhaps an unlucky cycle, you can see that again. Everything can be seen. So it's a really, really brilliant way of journaling, tracking the trades. So hopefully this has helped. Hopefully you can copy and paste this sort of template into your own, and I'll see you in the next video. Bye for now.